Business on One is proudly brought to you by the Government Institutions Pension Fund.
The Bank of Namibia is the state body mandated with regulating the financial sector of the country. Over the course of 2 days this week, the Monetary Policy Committee held its first bi-monthly meeting to deliberate on the monetary stance going forward. But the one-to-one link to the rand was the key factor, and the governor acknowledged that at 4%, the adjustment by 25 basis points is appropriate to safeguard the peg. The Namibia dollar remains pegged to the South African rand as it is a member of the Common Monetary Area Agreement that binds the currencies of 4 countries to the rand.
So what we have done here is we needed to make sure, Cons, that we align our interest rate to the anchor country as well, in terms of the agreement that we have got. We have got some latitude, and you could see that we have made use of that latitude. South Africa has increased interest rates. We have not done that. We had that latitude. But we need to make sure that we don't get so behind the curve that we continue to play catch up, because central banks that are continuously behind the curve and playing catch up rarely succeed in terms of economic stability. So that's one of the things we need to be careful of. So we also have taken the stance not only to align with interest rates environments in South Africa, we have also taken this decision to exit the current negative interest rates that we have got. And negative real interest rate environment, it simply says that the inflation is currently higher than our policy rate. If you see, we are telling you in January our inflation has gone, our headline inflation has gone to 4.6%, and you have got a repo rate at 3.75%, you have got negative rates.
Kavachab said despite the fact that Namibia loses out on monetary independence, the gains from the agreement are significant and ensure stability for the economy.
We are an open, small economy in a fixed exchange rate environment. We are in the common monetary area with South Africa, Eswatini, and Lesotho, and our currency is on par with the South African rand. The agreement dictates that for every Namibia dollar note issued, the Bank of Namibia must keep an equivalent amount of foreign currency in South African rand and or other international reserve currency. That's what he says. We cannot just go and print and issue Namibia dollars left and right in terms of the agreement that we have signed. So what we need to understand is, if you are in a monetary currency area arrangement, there are certain benefits and there are certain costs to that. The benefits mainly include elimination of exchange rate risk, as you're supposed to benefit in trade, because a monetary area colleagues or members should actually trade amongst themselves. You have got some credibility that you can't have on your own. And so far we have seen this arrangement have served us quite good in terms of stability, in terms of competitiveness. But we also need to understand that being part of that has got a cost. And one of the key costs of this is the loss of monetary sovereignty. You cannot just go and do as you please in terms of an independent monetary policy as if you are not in an exchange rate environment.
The increase in the rate would mean Namibians will fork out more when borrowing from local commercial financial institutions.
Business on One was proudly brought to you by the Government Institutions Pension Fund.